Hey, how's it going, everyone? I want to start this video by saying a massive thank you to every single last one of you. The support on my last video has been mind-blowing, to say the least. I did not expect that many people to come in and watch that video, let alone comment, like, what have you. So thank you to every single last one of you, and I really hope that you guys, stick around throughout the year and see what I've got. A little preface for the first clip y'all saw. I kind of forgot about my tags, and they were just a tiny bit expired, just a little bit. And anyways, I was trying to record a moto vlog for a different video idea that I had, but I'm gonna end up making this one instead and putting it out for you guys. So I hope that this suits your fancy and you can again find some sort of value or inspiration or just anything out of this video. Here in a second I'm gonna cut over to a clip of me on TradingView just trying to explain essentially my strategy and what I look for every single day in the charts and just how I begin. I've had a lot of you ask me like, what's my strategy, where do I start, many different things. I've had a lot of different people with vastly different, ranges of trading experience. And so hopefully, whether you've been trading for a month, whether you've never traded before, whether you've traded, even 3 years, I hope that you can find some sort of maybe help in what I show. Aside from that, that's all I've got for now. Let's get into the actual meat of the video, and I hope you guys enjoy and find something useful out of this. Peace. Alright, what's going on, everyone? Here on the charts, and I'm going to show you guys just the indicators that I use, the things that I use, and explain this trade that I saw yesterday during New York session around midday, like lunchtime-ish, just after Euro session had ended. And hopefully you guys can find some sort of, I guess, use out of this. I do want to say ahead of time, this is not, don't watch this video, especially to anyone who's new to trading. Don't watch this video and sit here and then go into the markets on Monday or Tuesday, buy an Eval and think that this is just going to make you profitable and get you to that next stage. All right. One big thing that I learned whenever I was first starting this whole thing is that there is no one-size-fits-all strategy. There is no person out there that can teach you a strategy and it automatically just make you be at the level that you want to be at. All right, these are things that I have come to pay attention to and notice and look for whenever I am entering and exiting trades. I've built this up through, tons of back testing, through tons of just research into the style of trading that I like to use. I do use bits and pieces of support and resistance and supply and demand to find my entries within the trades, especially like with this is a great example of things that I'm looking for when it comes down to entering a trade. I did not take this trade due to the fact that I just have been on a break for the past week and a half of trading. January has been a little rough for me and prices just felt really odd. I haven't found much of my setup during the times that I want to, so I'm just not going to trade it. I'm still going to watch price move each day, but I'm not going to place any trades. That is something that I like to do at the beginning and still do, is just watching the candles move on my selected future that I like to trade, which happens to be the NASDAQ E-minis. It helps me to identify certain things like certain candle movements or certain fair value gaps, things like that, that could go against my trades. It's helped me more often than not in pulling out of trades. I can't count how many times I've been in a trade, saw a candle move a certain way, and thought, that doesn't look right. I'm going to pull out of this trade, and the next thing I know, a couple minutes later, we have completely gone back in, the wrong direction, and if I had still been in the trade, it would have hit my stop loss. It has saved me countless times by just being able to identify things that the NASDAQ, for me at least, likes to do. You kind of want to be able to read those things. It's helpful. It might go a long way in helping you and to be able to notice certain things or notice certain patterns that even form throughout the day that you could be taking trades off of. But essentially the trade that I saw, I had originally looked in at the charts around just after open, and we had these massive candles just after 9:30 open, leading into around lunchtime. And I had seen on the 15-minute that there's a fair value gap up here. And there was also this point right here, which intrigued me, because with support and resistance, there is essentially the simplest way that I can explain this is think of a room, right? If you're standing on the floor, or you're standing on top of the floor of the room, right, it's going to support you. It's going to support where you're at, right? And if you happen to fall through that floor, as price has done right here in the past, that now becomes a roof. That is a point that, to me, price is going to have to break back through to make that a floor, or make it a support level rather than a resistance level. So I am hoping whenever I see this, that price is going to come back up, fill in this fair value gap, and then find some sort of resistance at this level. And so if we continue forward, the movement of price, right? Price comes up to this point right up here and fills in this fair value gap that was right here. We haven't been able to push up past this area. We see a bearish candle come in to the downside that forms a fair value gap right here. And to me, this right here indicates that this area could be a zone. So I'm going to draw it in from the top of the candle to the bottom, or the top of the wick to the bottom, pull it out, and that gives me my zone with the fair value gap just at the edge of the zone. So to me, I'm going to want to now, instead of entering a trade here, I'm going to want to wait for price to essentially pull back into this zone, fill in this fair value gap, and try to continue to the downside off of this zone. So price will come up. And off this candle, it taps in right here. So this is where I would instantly now look to place my sell order. I would put my stop just above the zone, and if I'm going for buy side, it's of course the ladder. Put your stop just below the zone. Something to learn or note as well for anyone new to trading, your stop loss and just understanding how to place your stop loss on any given trade, it is essentially the area that your trade becomes invalid. That is the point where your stop loss should be every single time. Where does your trade stop being valid? Now for me, my trade on this idea stops being valid if price breaks through this zone. If it can come up and break this high that's right here, the tip of this this wick essentially, and break through this zone, then my trade is stopped being valid, and I essentially want to have the market pull me out of my trade. Now, where I'm going to target for this given trade would have been just at the edge of this fair value gap here. I've seen price tap it here, and therefore I'm not sure if the market's going to find any sort of resistance at this fair value gap. I am not the most versed on fair value gaps, by the way, so you know, if anyone out there who's really great with fair value gaps and fully understands them, has any advice on just understanding them further, by all means, please do tell me, because it's something that I still am trying to fully understand on, if price is going to potentially want to break a fair value gap or not, things like that. But anywho, this little setup right here is exactly what I'm looking for. And if you notice, we go further, price starts to come down, pulling out of that zone, and taps TP right down here. And price actually went much further, so I could have targeted much higher. But if we come back and essentially look at where we're at, right, what is my risk off of a trade like that? So if I'm targeting that, pull this down just a little bit more, and that gives me my 2-to-1 risk to reward that I am looking for. I normally take 2-to-1s. I could go, just below the fair value gap, seeing, hoping that it's essentially gets filled in and price continues further like it ended up doing, and that would give me my 3-to-1, which is usually a max of what I am taking on any given trade. I do not like to hold trades for very long. I don't like to go for, something way like this, or like try to target this zone down here or something. Nah. I want to be in and out of the market on a simple, 2-to-1, 3-to-1 trade and be able to call it a day. But that is what I'm looking for, essentially. That is what I'm going for. Something to note as well, you might also wonder, how am I using the RSI and incorporated essentially into my trades? And something that I also noticed that would have gave me an extra piece of potential conviction on this is the fact that price has been running overbought for a while. I only use the RSI to tell me if price is overbought or if it is oversold, and potentially we could see a reversal at that point based off of seeing this model, seeing the fact that we are overbought currently, and seeing the fact that, to me, this is a level of resistance for price, and price would have to break through there anyways in order to be able to want to go higher. But anywho, that's pretty much all I do. That is all I look for. I just look for that exact pattern right there, find my entry at the zone. Off of a valid zone, it must have a candle, or at least two candles, that are leaving very quickly with an engulfing just before the zone, and a fair value gap created by the previous candle that left the area of the zone originally. But yeah, I keep it simple. I do not like to overcomplicate it. I do not like to super overanalyze everything. This is what I've been trading for the past 4 months since I switched to futures, and it's just something that I'm building upon every day. I am constantly changing it. I'm constantly doing new things, or trying to look for new things to be able to stay adaptable to the markets, because that's very key for longevity, is just adapting to the conditions that present themselves every day. And part of that adapting, that's why I didn't trade for the past week and a half, just because I knew that market conditions at the current time were not favorable for me and my strategy. This was the only time this week that I have found an A+ setup using, my model and my strategy. It's the only time. And therefore, I'm just not going to trade during those times. It's not worth my time to sit here and gamble away at, potential earnings when I could just wait a week, wait 2 weeks for better volume, better price to come in and be able to actually find my money. So in this section of the video, I want to give you guys just a general look at how I went about laying out my rules for my strategy, and maybe you can find some help in making your own strategy and building a guideline for yourself that works for you. This is not a one-size-fits-all thing, like I mentioned before in the previous section. Trading is about finding your own unique style that works for you, and your own unique edge on the market, or your own just thing that you can find success through. Everybody trades differently, everybody mentally thinks differently, and everybody can tolerate different things. So it is always good to take everything with a grain of salt, and do not just try to copy and paste things. But I do want to give you at least a general layout of how I went about building my strategy. My time zones that I trade in, if I'm on an Eval or I'm building capital on a funded, 5 a.m. to 9:30 a.m. Eastern only. Reason being, the size of the candles and zones are not as big, so I'm not risking near as much, especially being on an Eval with drawdown limits and restrictions. I'd just rather not. I don't want to risk too much, and then 2 days later I've got to buy a whole nother Eval to try and pass. I'd rather span it out over a couple days, so that way I can each week see how the market feels essentially, and know which, if I want to continue trading for the rest of the week. Like if I went out Monday, Tuesday, okay, maybe then I'll look for another setup Wednesday. But if I lost Monday, Tuesday, then not having to risk near as much, I can kind of gauge, okay, Monday, Tuesday were rough. I don't really know if I like the look of this week, so I'm probably just not going to trade this week, and I'm just going to move on to next week and look for better opportunities whenever, market conditions clear up or something. If I am on a funded where I built up, decent little bit of capital at least, and gave myself a bigger, drawdown size around, I like to go with around 3K to like 4K. Then I will switch over to trading New York session and looking for my setup within New York session to try and just scale the account up further to be able to take bigger trades off of bigger moves and of course, be able to make more money, which is what everyone wants to do at the end of the day whenever you come into trading. I mean, no matter who you are, realistically, that's all we're all here for, is to make more money. And so I do not limit myself to any specific day to trade. Monday through Friday, I will trade if I see my setup present itself, and I feel confident in market conditions to give me the trade that I need, or the trade that I'm looking for. I do not place a trade every single day of the week all the time. That's just not, for me at least, I found that to not be as helpful in the long term. Trying to force a trade every day if I don't see an A+ setup, or I don't see the conviction that I need to place any given trade on any given day. The time frames that I trade on are the 5-minute and the 15-minute. The reason being, they're just easier for me to understand. They are easier for me, again, to be able to find an entry that doesn't have too big of a risk for a stop loss, where I can see where my trades become invalid much easier and not risk near as much. Price is fractional. The 15-minute is essentially just 3 5-minute candles. The 1 hour is essentially just 4 15-minute candles. Price is fractional, and if I can find a better area to enter my trade, then I'm just going to do that. So I prefer the lower time frames for NQ, so that way I can find that. The max daily loss that I have for evals is minus 500. I only take 1 to 2 trades max a day, so if I take one trade and I have a loss of 500, then I stop trading for that day and move on to the next day. Try to review later on that day what went wrong with the trade. Why did the trade not hit? Did I miss something? Did I not see something in the moment? Whatever it may be. And also, it just keeps me from blowing an account within a day or two. Blowing an account over 4 days is fine, because I stuck to my process over an extended period of time, and it just was a rough time. Versus if I blow an account within 2 days, I took 2 days to just essentially take bad setups and not give myself the time to have a general sense of market conditions that week. My max daily loss for fundeds when I go past 3K. I do also sometimes, now more often than not, am trying to push that past 4K built up for drawdown, so that way I can start trading New York session during 9:30 a.m. to 2 p.m. And there I will increase my overall risk of minus 750 for a max overall daily loss and max stop loss for any given trade during New York session if I'm doing that. The reason being is even if I'm at 3K, right, for example, and that is, I'm at 53K, then that means that I have 4 total trades, just like my evals, to lose back to back over 4 days. And by that point, then I would blow the funded. And that's, I don't lose for, more than maybe a day or two. I will have, a bad day or 2 bad days or something before I'll stop myself for the week and just say, okay, it's time to take a break. Let's just, watch price throughout this week, see if it clears up. If not, then we just don't trade. If I'm on an eval, of course, my max stop loss is the same as a max daily loss. It is a minus 500. That would be my one trade for the day, and I would be done for the day if it loses. As I've mentioned before, max trades in one day is 2. I normally only take 1. My max MNQ contracts, if I did trade MNQ, which I don't normally now, I started out trading MNQ to, of course, not trade near as much on evals, to not have to like risk near as much trading NQ, because obviously one contract on NQ is much bigger than 2 contracts or 3 contracts on MNQ. It gave me a general sense starting out trading the smaller version of NQ of what I can and can't do, being able to develop my strategy early on, and slowly have migrated into just trading NQ, so that way I can scale myself up to be able to take bigger trades, to be able to make more money, to be able to take bigger payouts in the future, moving myself up slowly but steadily. My max NQ contracts that I will ever trade at one given time is 2. With Top Step on their evals and their scaling plan, you can go up to a max of 5 contracts in one trade, but I do not like to go that high on NQ. That is an insane amount of contracts. So the way that I like to go about my risk to reward, I look for a minimum of 2-to-1 RR on any given trade. With a maximum of 4-to-1, this is just what I found works for me, and based off of my model, what works for me. And what I know I can hit usually around these given times, finding my setup. What works for me may not work for you, many different things. You might be able to squeeze out more. I probably could squeeze out some more out of a lot of my trades, but personally, I just slow and steady wins the race. I would rather just take what I know works at the moment for me and scale it over time. This down here, if at any point I'm up on a win, I don't trade more. This is more so if, like, let's say my first trade is, a 3-to-1 or a 4-to-1. Okay, I'm done for the day. I have made well past my minimum of a 2-to-1 that I'm looking for. There's no point in me trading more. The greed is going to get you every time. Do not be greedy. The markets will take back money just as quick as they give it. So that's just something that I read every day, so that way I can remind myself, of course. If I'm up on some massive win, if I'm up 2K for the day, I do not need to trade more. There's no point. I have made a sizable amount of money, sometimes even for the week. I'm done for the week, and that's just enough. I'm not looking to take massive wins and massive plays on the charts. I'm just looking for something short, simple, to the point that can make me money. And that's pretty much how I went about my layout of making my strategy. This, of course, will change over time, and I will essentially continue to build upon this in any way that I can find to be suitable to help it and to help me grow. But yeah, I hope this helps any of you maybe in making your own strategy, or just understanding where to even start with building one, stuff like that. But yeah, I want to say I appreciate you if you have made it to this point in the video. This is pretty much all I've got for you guys at the current moment, or at least on the topic of what I do, what's my strategy, what are my rules. I hope that you guys can find some sort of value out of this video, and maybe have some help in making your own strategy, or your own set of rules, or your own model, or just getting a basis of certain things within trading that are a little complicated to understand. It's a complicated thing to do at the end of the day, as we all know. Anywho, I hope you guys have a good one. I hope everyone has a blessed trading week next week, and I will see you all in the next one. Thanks for watching.